Hello guys, welcome to another video from Post Trade. In this video, I'm gonna teach you guys valuable information in the forex industry market. Stay tuned and watch the end. Welcome back guys. In this video, I'm gonna teach you guys more about candlestick. This is called domino break in the market. In this video, you guys are going to learn about candlestick. It's no more about bullish engulfing, three white soldiers. I'm gonna teach you the simplest and the easiest way to read candlestick. Stay tuned guys. So before we proceed, I'm going to show you guys how it looks in the drawing board before I show you guys in the chart. When market is on a downtrend or in a bearish market, you guys already know it will be forming in a descending formation. So in this video guys, you guys are going to see how I mark my base candle, the biggest bearish candle when market is falling, when market is in a downtrend, the biggest bearish candle from where the downward movement got initiated from. That's the biggest bearish candle. From my own here, I'm using blue color, but most of the time it's always red according to your personal preferences. But this one I'm using blue color. So in this whole entire, from the open price and the closing price of that candle, you will see it takes three candles. It takes three candles to break that low. The same thing applicable to an uptrend. It takes three candles to break one particular candle, which means in a situation like this, we are having a third domino break. What do I mean by third domino break? It took three candles to break one candle. It means that we have three domino break in that market, in that zone. So we are going to mark out the biggest candle over there. That's our what? Base candle. That will be our demand candle in an uptrend. In a downtrend, it becomes our supply candle. That is a point. If market returns down back to that point, that's a point we are going to place our order. You don't refine here. You don't come around now to start refining. Here is the candle that broke the high. So this is the candle that broke the high of that bigger candle. As you guys can see, it took 1, 2, 3 candles to break that one candle, which is a third domino. Sometimes in the market you will see it breaking the same high or the same another candle with 2 candle, 3 candle, at times 5. It depends. At times 5. So when it breaks with 3, you call it 3 domino break. When it breaks with 4, you call it 4 domino break. When it breaks with 5, you call it a 5th domino break. So in this situation, we are having a third domino break candle in the market. So this is how it goes. We have 3 domino break in the market, and when market returns back to that candle high, that main candle that this third candles broke, when market returns that point, that becomes your base candle. That will be a point where you'll be expecting a buy, where you'll be placing your order for buy. I hope you guys are following. As you can see, you have your opening price and your closing price. When market returns to that point, then you will be buying in the market. Same thing applicable to a downward movement. When market, after it must have broken, after a successful break of that major big candle, then you have your sell. Now let's go over to the chart. Let's spot it out. Let's spot out where we have a domino break in the chart, so that you guys can learn and get the information. Okay, I think I have seen one. So in a situation like this, in a place like this, you can see the biggest bearish candle over there. Let me mark it out. The biggest bearish candle over there. As you can see, this is the low of that bearish candle, and this is the high of this big bearish candle. And this is the candle that it took to break that bigger candle. It took 2 candles, and the one I marked above is the one that broke that major candle. So if you are to mark your supply, you will mark with this major word domino break. This is the first candle and this is the second candle. So it took two candles to break the high of that major big candle, which simply implies that we are having a second what domino. You're having a second domino what break in this move. After the successful break in a move like this, when it is in an uptrend, which means you are going to be placing your order where in that base candle at the opening price of that base candle. That will be where you'll be placing your what your buy what limit. Then and you'll be targeting you place your TP according to your risk to reward. According to your plan, you'll be placing your TP, maybe 1 to 2, 1 to 3, depending. You'll be placing your TP. So as you can see, when market return to that domino break, it's a strong reversal break candle. When you see them, you see a formation like that, we usually have a strong reversal in the market. So in a situation like that, you place your order and you buy. Same thing applicable in a downtrend. If it is in a downtrend, is the same thing. In an uptrend, is the same thing. Here also we have another second what domino what break in the market. Remember guys, we can have 4 domino break, we can have 5 domino break, but just be conversant with how it works, how it's being presented itself, how it presents itself in the market. I hope you guys are following. Here we have a second domino break. Here becomes your first what candle and the other one becomes your second what candle. Now the both of them put together gives you what a second what domino. It simply means we have 2 candle against one. It simply means we have 2 candle against 1 candle. So in a situation like this, if market is in an uptrend, then you'll be buying from the what opening price of that what base candle. You'll be buying from the opening price of that base candle. If it eventually fails, then you know, okay, you take your SL and manage your risk. The same thing applicable to your what downtrend. Same thing, exactly same thing, exactly the same thing. So you have to place your sell order over there and you target what your TP. I'm just showing you domino break here. I'm not just reading structure. So from structure wise, we might not be selling there, but I'm just teaching you guys about domino break so that when you see it in the market, you can easily say, oh, this is what we are anticipating in the market. Okay guys, I hope you guys are following. This is a very short video. I hope you guys get the valuable information and consider subscribing for more videos. Thank you guys for coming around. I will see you guys in my next video. Shout out to you guys. Bye for now.